So it is streaming live now. So I'm going to let you have the floor.
Hello, everyone, and thank you for attending the Central Ohio Reentry Week Housing Panel discussion, where we will focus on the housing barriers that those that are formerly incarcerated or justice involved face when searching for housing. We will also talk about different pathways that you can take to go from renting to homeownership as well as how we as a community can help this underserved market. We have a great list of panelists joining us today. We have Michael Jones, who is a Columbus realtor with over 26 years of experience. Michael is currently a realtor with Caldwell Bankers and currently serves as the president for the Columbus Realtors Association. We also have Scott Voekel, who is the branch manager with Premier Nationwide Lending, and he has over 20 years of experience ranging anywhere from down payment assistance to getting those in difficult situations approved for a homeowner's loan. We also have joining with us Marvetta Froe, who is a restored citizen. She is a business owner of Breaking Barriers and is also celebrating her 1 year of homeownership. We will also have with us on the panel Stacy Burke of Restorative Financial Services. She has over 15 years of experience with financial wellness expertise. We will also have joining with us Carlie of Affordable Housing Alliance of Central Ohio, where they focus on all things housing, ranging from renting to homeownership to economic mobility. We are so happy to have you here with us today. And what is going to happen today is we have a pre-recorded session of our housing panel discussion. This session is about 60 minutes long. Immediately following the session, we will have the entire panel available for questions and answers or to address any concerns that you may have. So please bear with me as we go ahead and load the pre-recorded session for your viewing. Thank you. We're going to begin the discussion with just really diving right in. Approximately 5 million formerly incarcerated individuals live in the United States with us today, and they face many, many barriers to accessing permanent housing. I want to begin this panelist discussion by talking with Marvetta a little bit about some of the strategies and steps that she took from going from incarceration to renting to homeownership. Marvetta, before incarceration or being justice involved, were you a renter or a homeowner? So before actually becoming incarcerated, were you a renter or a homeowner?
Before becoming incarcerated, many years ago, I was a married homeowner, so shared joint. And then a renter, but near incarceration, I was actually homeless.
Thank you. Thank you for that. And so you've been there, you've walked the walk, you've experienced it looks like the components. You've experienced being a renter, you've experienced being a homeowner now, and even experienced homelessness. Mm-hmm. So in facing that, and knowing it and have walked through those steps before being incarcerated. Once incarcerated, did you think about a housing plan upon being released? Were you able to plan that before being released?
Absolutely. I was very fortunate. I had a mentor who assisted me with my barriers, the barriers that were beyond housing barriers, just internal barriers, external barriers, those barriers that hindered me from tapping into my greatness. And she worked with me once a week for 21 months. She visited me every week. In the beginning, I didn't work on housing barriers. I was just trying to stabilize internally and figure out how I got here and how do I prevent myself from getting back here. But as we neared the process of the housing plan, My housing plan was pretty simple. Would be fearful to some, but I knew I'm a forecaster, so I was thinking about long-term effects. So I was going into a program. Period. I am not from Franklin County. I committed my crime in one of the rural, smaller counties with limited resources. So my goal was to transition out into Franklin County, into a program where I could access resources, I could develop and grow and be guided and learn and be the best that I could be without feeling pressured, rushed, paying rent, getting a job right away, because, I just needed to transition. And so that was my plan. And then once I was able to enroll in the housing program, and I can just tell you this, my next step was to rent, 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 and rent. I never had a plan to buy a house, ever. I never felt worthy. I never felt capable. And that's the behavioral and the emotional that Stacy alludes to. I never felt that, ever. So I was going to rent for the rest of my life. I'm just humble and grateful. I was just thankful that I rented a condo for 8 straight years. I was the best tenant. I paid my rent early, and he would love to have me back. And it stabilized me. That's where I became stable enough to feel confident enough, to position enough to believe I could buy a home. That's where it happened.
Thank you so much. And as I stated before, I know, Marvetta, that you have actually lived this. So I appreciate you sharing some of the steps that you took to overcome those obstacles. Michael, I want to ask you, as a realtor, are these some of the things that you have heard often in real estate and working with individuals and consumers that are looking to buy a home? Or is this something that really you haven't had to face or deal with your customers?
Be very honest with you, I've not had a lot of that in my experience, and I'm grateful for today, the opportunity to hear Marvetta and her story. And as I shared before, it's becoming more of a passion for me to be able to help contribute to helping restored citizens become homeowners, because the ability to create stabilization in their lives and wealth creation or wealth stability that I'm sure Stacy will talk a little bit about is huge. It's huge. So even though I've not been able to participate before, now I'm aware, now I can get in the trenches and share the story and share the opportunity for other of my colleagues that I think could be helpful in the process to do just that.
Thank you so much. And as Marvetta stated in some of her responses, it is so important to plan and build a network of support. A lot of times individuals that are coming home from incarceration or have even been restored in the communities, they face many barriers, and housing being the main one. So to have those connections and network is very important, and it can really, I've seen it really be successful when you plan while you are incarcerated and then practice those steps and execute that plan once you are home. As Marvetta, you stated, rent, rent, and rent. You rented for 8 long years, right? Tell me, how long did it take you to actually find a place? So you transitioned back into the community. How long did it take you to find a place? And were some of the resources available then that may be available now? And as far as the financial assistance and things like that?
Well, I'll say that no to that last question.
Mm-hmm.
It's very resourceful now. There wasn't that many resources or as many resources, but I deliberately stayed in the program 1 year because I just felt like I needed that much time to get stable, to acquire some resources, to understand the application process, what the criteria was, what the expectations were. Did I need a strategy to get beyond background? Because I was eligible in every other category. I've never been evicted. I had a good credit score. I had employment. I have viable employment. It was just my background. Every time I applied, and I think that after 8 months, I applied to 2 apartments, and I got those 2 no's, and they were discouraging. So I sat down for a little while longer and went back to the planning board because it was hurtful. And then I acquired another or modified the plan. And then I'll tell you that I researched the Small Business Association had a private property owners event. This is after 4 no's, and this is about a year, maybe 14 months out. And so I researched the name of the organizer. I took my bus pass and went down early. I dressed real nice. I introduced myself. I asked her, could I have 5 minutes on the mic? There were 350 private property owners in the audience. And I said, I'm not looking for a handout. I made mistakes in my life, but I'm a hard worker. I'm qualified by criteria. It's just, that barrier that prevents me, but I'll be the best tenant you ever had. I will not damage your property. I will pay my rent early if I just get a chance. I just need a chance. Out of that event, that's how I got my condo. Someone called from California. So I put a fishbowl in the middle of the center of the table and said, if you want to help, put your business card in there. And that's how I got my condo.
Wow, that is awesome. You
That's
literally
a true story.
began to build what I like to call a renter's profile.
Yes.
Because you have to basically sell yourself.
Yes.
Versus someone of the general public searching for a home to rent in a market that we're in a housing crisis and have been for some time, or in a housing shortage, not just in buying, but also in renting, when in most cases, individuals that are coming home are either going to rent or they're going to live with family, right? Or they're going to be homeless. So you definitely have to build yourself on that and feel valuable enough to do that. So thank you for that, Marvetta. Marvetta, you mentioned that you are, to us earlier, that you are 1 year celebration and becoming a homeowner. So those 8 long years that you rented, you worked hard, and like I said, building your renter's profile. So when did you decide that I am valuable enough to own a home and I have what it takes to do so? When did you decide that?
I decided that when I acquired an empty nest. My daughter moved to North Carolina, and the condo started to close in on me. I don't know if I was buying too much or if I don't know what was going on, but it just started to seem real small to me. And so I actually, another restored citizen referred me to a realtor. I wasn't even serious. I just wanted to gather information. I wasn't trying to buy a house right now. I just wanted to know how it works. And so she actually referred me to Homeport and some other programs, Columbus Urban League, just to be able to gain that training and knowledge and awareness of process to be prepared. And so I did that, but it just went very quickly. I still don't know what happened, but I'll tell you that about a year before I started this aggressive search, I started to save $400 a month outside of my rent, and just put that up in addition to my regular savings. And my thought was, I had already explored kind of what mortgage payments would be based on my situation. So I would need that rent I'm paying now plus an additional $400 monthly. I need to be able to pay that for 25 years with no problem. I need to show myself that I can do that. And I started to practice that about a year before I actually went and met with the realtor and got aggressive. But it took me 5 months. Once I met with her and I got serious and I got aggressive, it took 5 months. There was some challenges because I've always, as Dana knows, since I've been out, I've worked 2, 3, 4 jobs. I mean, I got my master's degree. I mean, I'm going to make it work. It doesn't matter. I'm hungry. I want to live well. I want to leave my child a legacy. So I just did not know. What I did was I got my master's degree. I resigned from a position, 7.5 years, a leadership position, to take another, I was already in the leadership position, but part-time, to move full-time, and then bring on another full-time position, but I had a 3-month gap. So the lender couldn't get it done for me. And then I was a business owner and I made 6 figures, but they couldn't count the income because I didn't have 2 years of the tax season. What? No one told me this. So I just trusted the process. I just kept going. I wouldn't give up. I kept calling and asking, what else do you need? What else can we do? What other angle can we look at? And the third lender closed me in 17 days.
Wow.
First 2 couldn't close me for 4.5 months. The third lender closed me in 17 days. And wow. I still was asking, are you sure they're not going to take this back, are they? So that's what happened. That's what happened.
That is so awesome. And it just, we will definitely talk about some of the necessary steps in becoming a homeownership, income being one of them, and things like that. But just your tenacity, your persistency, just everything, and everything that you did, from the planning to the not knowing. Like you said, you didn't know that a gap would matter. You thought, long as I'm employed, I make the money, I can be a homeowner. Like, you realize that you had that moment, right? And then to have these obstacles come your way. And what do they say, when life throws you lemons, make lemonade? Well, you definitely made you some lemonade, right? In becoming a homeowner. So I'm just want to say I'm super proud of you. I have the honor to, know your journey, know your story, and just know all the hard work that you have done, and what you have achieved. So super proud of you in your home ownership.
Thank you, Dana. I just want to say this real quick. And I have my dream home. I'm going to perish in this home, not literally, but 4 level split, corner lot. I got all the amenities I wanted. I fought for it, and I'm extremely happy. And my equity has went up, or my value has went up $30,000 since I bought the house.
That is super happy. That is awesome. And so that is awesome. And that just leads me to Michael, actually, to talk about the housing market and the differences between a buyer's market and a seller's market. Michael, can you share some of your knowledge about that with us, please?
Sure, thank you. And I just want to say again, thank you, Marvetta, for sharing your experience. It is not only enlightening, but it's empowering and encouraging for me. I can tell you as a commitment, and I'm going to commit for my friend Scott here also. And Dana, this is a commitment to you that you and your team will never lack the resource. In other words, Scott works harder than any of the lenders that I can imagine in helping people that have less than ideal circumstances or financial backgrounds, job stability, et cetera. He can make some things work. He's not a miracle worker, but he is patient and will follow through with people. And so that's a commitment. If you can find people with the tenacity, as you called it, that Marvetta has, and the perseverance and commitment to making this work, you will have the resources available from the professional standpoint, whether it's me or somebody else, another realtor or realtor group that I could refer you to. So thank you for that, Marvetta. And to answer your question, very simply put, I don't think that it's pretty simple. Buyer's market is where the market conditions are favoring, buyers in the marketplace, and the same with sellers. We're currently in a seller's market, which is driven because we have more buyers and fewer homes available. It's the law of supply and demand. That's the best way to look at it. If it's raining outside and you have the only umbrella, and you have, tens upon thousands of people walking around you can sell that umbrella for probably more than it's worth, which is in some cases where we are right now in this real estate market. So it's a seller's market. I expect that will transition, not anytime soon. So I know you're trying to look for the next 12 months or the next year. And I think that as long as we continue to have the buyer demand that's there, and I suspect that we will, at least for the next year or longer, then until we have a healthy balance of buyers and sellers, we will remain in a seller's market. So I suspect, personal opinion, probably the next 3 to 5 years before that healthy balance comes into the light.
And thank you for that, Michael. And that kind of just really aligns with individuals that are currently coming home into this market, and will definitely help them to plan out that 3 to 5 years that they will obviously be probably renting, and better position themselves when that time comes where the market may be more evened out or more in their favor. Can you tell us any strategies that you may recommend and that can help those with criminal backgrounds put themselves in a better position when approaching purchasing a home?
Well, sure, I can be very candid with you. I don't think that there are any unique obstacles that are in front of anybody that's been previously convicted or a restored citizen. I mean, as I look at that, if, you may have the job gap, but everybody's going to have that same issue. So the underwriting guidelines, and Scott certainly will weigh in on this, they're no more against, I can't think of any kind of mortgage application that asks, have you been convicted of a crime? It's just not a material fact that matters. So, I don't think that there's anything in front of a restored citizen that's an obstacle other than those that would be before you and anybody else on this call, like a job gap or lack of savings. So I would say, in order to kind of participate in the market, listening to some folks like Stacy, Burke, to learn about where am I financially and how do I stabilize myself and put myself in a position where I can do what Marvetta did, this exercise of saving an additional $400 a month to prepare myself, my budget and my training for my spending to support a mortgage payment and or any incidentals that go along with that. Aligning yourself with a stellar mortgage lender like Scott, who's able to pre-qualify you. And again, Scott, like I said, he has patience. And sometimes he could probably and will tell you that it may take years for some people to get their credit where it needs to be, or if they have been on a self-employed for a year and they need another year, he will help you throughout that process. I've always been very positive in saying everybody's a potential homeowner. It's just a matter of when they're able to pull the trigger. So again, I think preparing yourselves financially, and that includes not only budget, stabilizing your source of income, but also your credit, and making sure that that's in alignment so that you can continue to build your score. Because again, lenders will tell you that the stronger your credit score, the stronger the loan program, the stronger overall an opportunity that you have before you to purchase a home with the best interest rate and the best down payment situation.
Thank you so much, Michael. And that just, shows that those that are formerly incarcerated, they really don't know this information, and they have predetermined myths that they cannot own a home because they have a background, or there's going to be, they faced all these obstacles in renting. So there has to be more obstacles in becoming a homeowner. And because they're faced with all these different barriers, they just get caught up in this belief that this just isn't possible. So it's great to hear from someone with your expertise to deliver that message that, there aren't any more obstacles in front of you than someone that doesn't have a background. It's just how you respond and how you plan in your approach. So thank you for that.
Of course. Scott,
I'm really excited to talk with you because you're the money man, right? And just kind of part of the pieces to the puzzle in walking from being incarcerated to renting to home ownership. You are very experienced. And so I want to talk with you about the different types of loans available to individuals and some of the criteria possibly needed. And then we will talk also about credit and things like that. So can you described the different lending options that are available, starting with, I thought it would be good to start with FHA, but you may want to start someplace else, but that's where I thought it'd be good to start.
All right. So basically, there are 4 different types of loan programs, and I like to break it down pretty simply and say they vary based on the different types of mortgage insurance that you pay with each type of loan program. If you put less than 20% down, you have to pay some sort of mortgage insurance, it's a federal law. So the loan program that you choose will vary based on how you pay that mortgage insurance. For example, let's use FHA as an example. On an FHA loan, you pay 1.75% upfront that's financed in, plus you pay a monthly factor of 0.85% for the life of the loan. Conventional loans, it varies because it's private mortgage insurance, so that mortgage insurance will vary based on what your credit score is, what your down payment amount is. So there's a lot of key players that go into that. And then USDA and VA all have options too. And again, VA, you pay a one-time upfront funding fee, but you don't pay a monthly mortgage insurance. And in USDA, you pay a upfront fee plus you pay a monthly. So each one is handled a little bit different. From a perspective of someone who has been previously incarcerated, there are no differences at all in the lending programs. There are no anything in the guidelines that say that they should be handled any differently or discriminated in any way. You just handle the programs the same. Now, government loans, i.e. VA, USDA, and FHA have something called a CAVERS report that we have to pull. And the CAVERS report looks back to see if there's any items that need to be paid to the federal government, to the best of my understanding. So that has to be cleared. Some of the biggest hurdles that I've ran into over the years, and I've done a lot of loans for people that have been in that situation, is that you got the 2-year job history, as we talked about. But one that most people don't think about is when you're not able to use credit cards and that sort, they get closed and you don't have the credit trade lines that you need to keep your credit scores higher. So that's another hurdle that we run into from time to time. But as far as loan programs, every loan program is available to everybody. And I specialize in a lot of down payment assistance programs, and they're available to everybody, no matter what their background or situation may be.
There we go. Thank you for clarifying that, Scott, because as I stated, a lot of individuals that have backgrounds and in my experience, they have, like I said, preset determinations and things in there that they have been told, or, they have thought that they have seen, that sets up a sort of fear and barrier that prevents them from even taking the steps to move forward in purchasing a home. You mentioned credit, and credit definitely is an important component in buying a home and taking the necessary steps to do so. Do you recommend things like Credit Karma, credit monitoring for someone that is coming home? Do you think that's important that they maintain and follow and track?
Yes, I think those services are great because, you can have a lender pull your credit, but every time the lender pulls your credit, it's a hard credit pull, and that can affect your credit scores. So by utilizing programs like Credit Karma or Experian or whatever, you can actually see what's on your credit, but not be hurting your credit in any format. So I think it's the best way to go. In fact, a lot of people that I begin to work with, we look at their Credit Karma account together to see what's on there before even moving forward with the loan, because there's no reason to have that hit on their credit if it's not warranted or they're not quite ready to go. And we can help people get ready to purchase by looking at that.
Thank you so much. I think that's an important piece in home buying and planning for someone that's coming home or formerly incarcerated, to evaluate their credit, to follow their credit and track their credit to make sure that they're doing the right things. And I myself use Credit Karma and I love it. It literally shows a forecast from last year of my credit to current. So it shows I see the hard work that I'm doing is actually paying off. So thank you for that. Anything else, Scott, that you can think of that would be of benefit to someone coming home from incarceration? And this is more for individuals that are maybe 12 months to release. If there is a way, do you think that they should begin looking at those things while incarcerated?
Well, first of all, I'd say Marvetta is the perfect candidate to buy a home with what she said. Anybody plans that in advance and saves $400 a month, we love you. We love you a lot. So there, you know, when you're, say, a year or two from being incarcerated and you're coming out, you're probably, most of your money is going into just getting caught back up.
Mm-hmm.
Expenses, we all have bills, you're buying furniture, you know, there's a lot of things that come at you right at once. And my advice is, don't be afraid to communicate and be honest and open with your lender, because if they know what your challenges are, they can help you overcome those challenges. You know, say for example, you know, Marvetta was great. She put that $400 a month into a savings account, and it sounds like she was ready to go whenever she first met the lender. Many people don't do that. Many people
Exactly.
mouth, and you know, we can help. There are numerous down payment assistance programs that are available in Central Ohio that we can take advantage of as lenders that can help have the money waiting for the buyers at the closing table. And, you know, for example, in the last year, I've handed out through just the clients I've worked with over $1.2 million in down payment assistance money and grants to buyers to help them be able to purchase homes. And it's, you know, when you're coming to your lender and you have $500 in your checking account, most places are going to say, well, you need to go back and save money. That's what they told me when I bought a house. But you don't necessarily need to do that, because there are so many sources to provide that money to you that you can close with nothing and be able to take advantage of it. So I think honesty and openness with the lender is really key. And I think that starts with the realtor. With, like, Michael is great at working with his clients. He can share that, you know, share with me your experience, and I can lead you to the right lender who can work with you for that type of business. Because lenders are very niched. You know, some people will do this program well, some people do that program well. So realtors know this, and they can help direct so you get the best experience possible.
Thank you so much, Scott. You know, we have just talked about a lot of information, a lot of great stories. Thank you all for that. But let's talk about some of the financial dynamics and really financial wellness of preparing to become a homeowner, even a renter, and all of those things that it will take to get there. So Stacy, I want to talk to you about your program, ONIONomics Financial Wellness. What is ONIONomics, and how does that process work?
Yeah, well, thanks again for the invitation. And I wanted to also just say how much, Ms. Marvetta, your story impacted me. I mean, it is so powerful and just speaks to what restoration really looks like. And, you know, to Michael and Scott, just, you know, the two of you, your ability to demystify this full process, you know, is just invaluable to, you know, our justice involved reentry community. But while we know that, or now know, hopefully, that there aren't maybe as many barriers as we thought there were in the process of getting the home, in terms of, you know, the administrative process, the lending process, what we've come to know at ONIONomics is that there are many internal barriers to being able to get it, because you might be able to get the home, but being able to sustain it and keep it is altogether a whole nother process. So to Dana, or to answer Dana's question, ONIONomics is a different type of financial literacy program. In a more formal term, it's called a qualitative financial literacy program. And without, you know, sounding heady, it's the opposite of quantitative. So when I think of quantitative, immediately I think about numbers. So you think about, you know, the more traditional side of literacy, budgeting, credit, savings, even things like mortgage, insurance, risk, investment, all of those things are what we typically think of when we think about a traditional literacy program. But Unionomics actually deals with the qualitative or behavioral side of personal finance. So one of the things that, we teach all of our students right off the bat is that all of us, myself included, have something called a financial operating system, right? And so if you live in the 21st century and you own a smartphone or a tablet, you understand the concept of how an operating system works. And if you're like me and you've ever gotten a little message or alert that you need to update that operating system, and it's in the middle of the day and it's not a convenient time, you will tend to press that not now or later button. Many times, actually, I have done that and found that it doesn't help the functionality of the phone. It actually worsens it over time. And so the answer to that, just to kind of stay within that analogy, is not to download more applications on top of the operating system, because if anything, that's going to compound the problem. But what we have found and what I've found over years of training is that's exactly how we've taught financial literacy. We've taught people that the reason that they have a dysfunctional relationship with money, that they can't save, that they can't stick to a financial budget, that they keep making the same cyclical financial decisions over and over that are not healthy, is because they just need more information. If they had more strategies, more tips, more data, if somebody just kind of sat them down and just went through the ABCs, then, they could fly right. But what we found is the absolute opposite. And that is that information by itself is not enough to change financial behavior long-term. Do we need whole financial sound information financially? Absolutely. And especially the reentry community, more so than anyone, because they're already behind the 8 ball. But Unionomics does not start there. Unionomics starts with helping students, first of all, to be able to identify what we call financial flashpoints, which are event-specific key events or series of events that essentially are a form of financial trauma. And because most of us actually have never been taught or shown how to process financial trauma correctly, that has caused this hard drive to be formed dysfunctionally, where it is very, unhealthy, even toxic, where it's fragmented, disjointed, and it doesn't operate the way it's supposed to. So our goal in this course, number one, is to help individuals get their hard drive healthy first. So then we can add the more traditional information on top of it, and you've got a healthy foundation where they can sustain. Because the opposite is what we've done, which is to put information on top of a faulty system. And what we found is that you will see momentary change where someone will do well the first month or 2, maybe even 3, but eventually those old triggers, or what we call money scripts, they will kick in and they will overwrite and literally wipe out the most sound, logical, healthy financial information every single time. So it is very much a behavioral economics class, even though we don't sell it that way to our clients. But everybody, no matter what level you're of income that you're on or you aspire to, everyone understands the language of trauma. And most of the people that we teach understand cyclical patterns of destructive behavior. And so in the same way that many of them are trying to break that in their personal lives, we help them develop a very definitive step of tools and principles on how literally to rewrite their operating system healthy again. I'm so glad I'm not alone on this mute thing.
Wow. Oh, yeah. Listen, we are all in this together.
We are.
Doom strong, okay? That's awesome. Stacy, I never, ever looked at financial issues or even financial issues that I've been through myself as trauma. So that is very interesting. dynamic of it and perspective. And many individuals that have been incarcerated, of course, have gone through financial trauma.
Yeah.
One that I can think of that really affects them and would affect them in home buying is sometimes while they're incarcerated, someone somehow gets a hold of their social security number, their credit, and before you know it, they have electric bills in their names, credit cards. I've seen automobiles, you know, and they've been incarcerated for 10 years. So they come home, and on top of all these other barriers, I have to repair my credit too. That's traumatizing, especially when they did not do these things to their credit, and to not have the knowledge to even know where to begin to do so. Can you explain to me, I know when we previously spoke and I was researching and learning of your wonderful program, you mentioned a financial neighborhood. Can you explain to us what a financial neighborhood is and how that kind of ties into where some individuals, what neighborhood individuals have came from that are incarcerated?
Sure. Well, you're kind of talking about, you know, two separate topics, but they definitely interjoin and interconnect. So again, the financial flashpoint, as I stated before, is an unresolved financial trauma. And basically, you know, within the midst of financial trauma, and, you know, we all have that, incarcerated, not incarcerated. If you lived in a COVID environment, you know, and you were a business owner or whatever, you know, you felt trauma on some level. But again, the key is that it's unresolved. It's that, you know, that individuals never dealt with, you know, the unfinished business of those incidents. And so as a result, they end up, or they land at a faulty belief system, or what is called a money script. So one of the examples, you know, and I had, you know, shared that with you, Dana, how we all throughout the course, we look at specific case studies for our students to kind of look at somebody else's neighborhood first and be able to kind of unpeel it correctly before they have to, you know, finally face their own journey. It's sometimes easier to look at Bob's and John's and Sue's first before you have to turn and look at your own. And one of the first case studies that we look at was about a little girl named Janelle. And her dad during the summer was trying to teach her the importance of saving money. So he let her get a part-time job, and he made a deal with her that half of her money had to go into a savings account. And he didn't really get into the nuts and bolts of budgeting, but that was his only lesson, is don't spend everything you make. So half has to go in the bank. The other half, he let her spend however she chose. So she followed his plan. And after a certain amount of time, she started to see her ledger grow, feel a sense of empowerment. But one day, as she went into the bank to go and make a deposit, she asked the teller what her balance was ahead of time. And the teller had this bewildered look on her face this time, because she proceeded to tell Janelle that her dad, a few days prior, had come in and had wiped the account dry. So she, the first opportunity she had, confronted her dad and said, "Dad, why would you take all of the money I had saved, especially when I followed your plan?" And he simply looked at her and said, "Baby girl, that was my money," and walked away. Wow. So at 12 or 13 years old, you're left, you know, to try and wrap your mind around what just happened here, you know, and you've got, mind you, a very underdeveloped, naive, and, you know, childlike mind trying to figure out how to connect the dots. And so in the midst of all that, whether you're a child or not, in the midst of trauma, we always make some type of internal vow or promise. Whether we realize it or not, it's something that's just automatic. And that is what we call a money script. Now for Janelle, her promise became at 13, anytime I get money, I'm going to spend it before anybody else can take it away. So the foundation of her operating system was, I can't trust, I've got to get rid of it before you get it. And because she never dealt with that, you know, in her 20s, 30s, 40s, good paying job, consistent income, but she would psychologically get rid of it whether it was spending, money on, a couch she didn't need, or lunch for an office of 20 or whatever. She would just blow through her money, and, and she wasn't ever able to save. So one of the things that we do is we help the students go back and identify key entry points of trauma, which a lot of which have happened in their youth, in their physical neighborhood. I'll say this, we teach that most of us, have either lived in the same neighborhood all of our lives or some of our lives, and even if you're like me, where you bounced around a lot and live from place to place, there's typically one neighborhood that you can identify with as yours. And that neighborhood many times has spoken and unspoken rules that basically govern what's okay and what's okay to do with and not to do with your money. And so many of our incarcerated individuals, they have a place that they identify as their physical neighborhood, and that neighborhood actually transfers into something called a financial neighborhood, which is where you've lived the longest financially. The problem comes when you get out and your now and today no longer match what you're used to, and they don't know how to navigate those waters. So some of them used to be able to go out and make 10 racks, in an hour because of how they were getting the money. And now, they got to work an 8 to 9 hour paying job, and they got mouths looking at them, and they've got, their girlfriend has to take them to group, and they don't have enough to get their own cell phone, and they got to drop 3 times a week. And it's a totally different landscape. And nobody teaches them how to navigate the difference. So it's right in those narrow places that many of them get caught up and go back. Because, at that point, credit, budgeting, and mortgage insurance risk is not going to help somebody right there. You need to show them how to navigate that narrow place so they can get to the other side.
Absolutely. Thank you so much, Stacy, for sharing your wisdom and knowledge. And like I said, I just never looked at it like that, but I have a whole new perspective and have identified my own financial traumas. Let me get my life together, okay? Thank you so much. Today individuals are being released in a COVID world, in a world that is unknown, uncertain. So previously, COVID was not in existence. They already had major barriers that individuals faced with housing and coming home. So we look at today, coming home into COVID, there's a housing shortage, all types of things going on, renting shortage as well, not just in home ownership. So Carlie, I want to talk to you about affordable housing and what does affordable housing look like one year into the pandemic and moving forward? If you can share some of that with us.
Yeah, I mean, that's the $1 million question though, right? I don't think that we know that, because the decisions we're making today are going to define what that future looks like. If you just focus on kind of that rental aspect that you were talking about right now, there are projections out there that indicate Ohio is going to have 400,000 evictions this year. And that's 7 times higher than we've had ever. 1 in 4 Ohioans didn't know how they were going to pay April's rent. So if 4 people who rent, statistically speaking, someone who is staring down an eviction. That's the kind of problem that we need to begin tackling. And I think, especially in Ohio, we've been very, very lucky to have advocates who have fought for the resources to be able to begin tackling that. The challenge, though, that we're seeing now is for all of those people who are past due on rent, too many landlords are refusing to accept their money. Because of these underlying market conditions, they know that they can get higher returns if they evict that tenant and write a new lease for a new person at a higher rental rate. So when I say that some of the decisions we're making now are going to influence that, one of the decisions is, how do we triage that? How do we get landlords to the table and who are willing to engage? And how do we create a stronger safety net so that those people who do have the money to pay are allowed to do it? As it relates to this conversation today, it's gotten a lot less attention, but we have a real growing question on what's happening with foreclosures as well. 4.4%, I think, of all of our mortgages are in a coronavirus specific forbearance plan. That's 2 million, more than 2 million homeowners who, because of coronavirus, have not been making their payments. And we don't know, again, what it looks like if we don't have a solution when that clock ends. If you zoom into some of the data from Central Ohio in particular on that, you see a real geographic focus. And it's familiar, right? So if you were paying attention to the patterns from the 2008 recession, the neighborhoods that are most at risk are neighborhoods that have high minority concentrations of homeownership and high concentrations of homeownership in low and moderate income households. So it's the South Side, right? It's the Near East, it's the Far East, it's Linden. It's all these neighborhoods that we know have made really strong progress since the last crash in achieving homeownership. And we're looking at that under threat now. Again, though, we have resources. We've in the last couple relief plans, we've been able to get the dollars, but they're not on the street yet. And the question that I have is, are we going to make those resources easy to access? Are we going to clear out the red tape? Are we going to get rid of the bureaucracy and let people get in there and get the relief they need? Or are we going to let the foreclosures happen first and see another Black homeownership eviction extinction event? And of course, like, so you're going to get me on a soapbox, right? One of the reasons that we have a big challenge is we don't have the inventory. We don't have the actual houses that people need. And that's driving up prices. I think a healthy market has about 6 months of housing inventory sitting on it, 5, 6, 7 months, somewhere in that range. We've got 2 weeks.
Wow.
We don't have the inventory, and we know that the affordable construction industry has been set back by COVID, that it's harder to build a house if you're practicing social distancing. It's harder to build a house when your lumber costs are through the roof. So as we have these relief dollars coming into Columbus and Central Ohio, one of the questions all of us need to be asking is, are we going to spend that money to make our housing system stronger and more resilient and more equitable? Are we going to let this crisis impact our minority homeowners, our female-headed households, those who have been just as involved but have made progress, or are we going to let them be sacrificed again? Are we going to learn from the lessons of the last crisis? So, how we answer those questions is what a year from now looks like.
Absolutely. Thank you so much for that, because it is, like we all know, very, very challenging. And when you think of affordable housing, you think just that it's going to be housing that's going to be affordable, and especially an individual coming home. They don't really understand all the real dynamics that go into place and that are in place. When you speak of the resources, can you share a few resources that may be available and how this population can be involved and stay educated about this matter?
Yeah, so one of the first things that I'm always going to recommend if you're trying to get your financial house in order is that we have free HUD-approved housing counselors, financial educators. That service is available. You don't need to pay a fee for it. And in particular, we talked about Credit Karma earlier. Great service, no qualms. I use Mint myself, but by law, every American is entitled to 3 free credit reports per year. Don't spend money on a service while you're still struggling. Wait and get that when you have a plan, and until then, use the resources that are available. We talked about what does it mean to come home and your credit has been tanked because somebody has been using your identification. Legal aid is a great resource to begin untangling that. I will say, though, that there are deeper challenges. You have a problem. I can give you an answer, but on that point, for instance, to get your credit repaired, you're going to have to file a police report. And 10 times out of 11, you know who did it, and you're not going to report them to the police because it is your family and they are just surviving. So just because I've got the answer doesn't mean it's going to be. And for me, that means we need to look systemic. We need to look above that individual solution. Credit report is another great one. There might not be any barrier towards getting a mortgage. There might not be a question, check here if you have been just as involved, but they are going to ask for your credit score. And if you have been incarcerated and your credit was dormant for 5 years, that is absolutely going to impact your score. And if you have restitution that has gone unpaid, that is absolutely going to impact your score. So it's baked into the system. And we need to look at different ways of getting people into homeownership and then preserving it and making it sustainable.
I'm so glad that you said that we need to look at different ways, because we really do, and we need to come together in doing so. So I have so enjoyed this panel with so much information given, but I want us all to stay connected. I want to continue to educate this community with strategies and ways, and also to let them know that there are resources and support there to help you through your transition in housing, and also just that continued support along the way. So you all will definitely be hearing from me in ways that we can come together to continue these discussions and continue to give information that will help better position these individuals. You know, we don't have all the answers. We're in this together. We're in the uncertainty just like everyone else, but it's just so much more challenging for those coming home from prison, and even challenging for those that are restored and living in the community. I want to take this time again to thank each and every panelist for attending today. And I want to offer each panelist a few moments to say final words to our audience. Does anyone want to volunteer? Thank you, everyone, and welcome back. We did have to cut the time a little short in our discussion. We all were very excited about what we were talking about, so we went a little bit over. So due to time, we did have to cut out a little piece of the pre-recorded session. However, we are ready for our questions and answers. If you want to go ahead and type your questions in the comments, we will deliver your questions to our panel. We have all of our panelists here today to answer your questions or concerns. Hi, Carlie.
Good afternoon.
Good afternoon.
Good afternoon. How are you?
Very good. This was great. This was a great session.
Good, it was. Hello, Scott, Michael, Marvetta. Hello. And Sarah is actually gathering any questions that we have, and she'll be putting them into the chat. We have one question here for Carlie. What is the best next step in getting more affordable housing for low-income people?
That is a great question. I think part of my answer is going to be when you say low-income people, who in particular are you talking about? Because it's a different strategy. If you're looking at someone who's making maybe $60,000 a year, but has a family of 4 and still struggling to figure that out, versus somebody who's dependent on SSI or disability benefits and is much further down the income ladder. Across the board, one of the big answers, though, is going to be that we need to build more affordable housing. We have an opportunity in front of us right now. I think local communities, our cities, our counties have received a significant infusion of resources to respond to the coronavirus crisis. I'm really curious to know what it would look like if we took just 30% of that, right? We've been saying here all day, if you spend 30% of your income on housing, that's a good place to be, that's sustainable. If we held our governments to that same standard, how much better would we be as a community going forward?
Absolutely, Carlie. I totally agree with you. You know, we like I said before in the discussion, we don't have all the answers, and we're just all coming together to try and get through some of those answers. And we are also, like you said, there's been a lot of resources made available. So it is going to be very interesting to see how Central Ohio brings those resources together and help those that are basically, you know, facing the barriers and in the housing crisis of not having housing or facing homelessness.
Mm-hmm.
See if we have any more questions. Questions for Michael or Scott. do you have any predictions or thoughts on what the current will do in terms of becoming more affordable? Will things get more inaccessible or will things level out? It's a big question. Haha.
Scott, do you want to go first or me?
I'm happy to kick in. I think interest rates are starting to head up. So as interest rates are going up and up, that lowers what people can afford. And I think it could cause problems in the other direction, and homes are continuing to go up. So it's kind of, if you are really looking for the lower priced affordable housing, it's going to get harder and harder. I would urge you to start looking in the market right now. Michael, your thoughts?
Yeah, I don't think it's I don't have a rosy picture to paint for anybody, unfortunately. I suspect that it will remain more of the same and potentially get a little bit more difficult in that affordable housing arena. As I might have shared with you, our benchmark for affordable housing surprisingly has gone up to $215,000, which to me is pretty significant. I don't think that that is a low number as many of us have contemplated affordable housing in the past. So the mark has moved up. I think that we create an opportunity for developers to look at alternatives. We know that moving toward the core of the city is not a reasonable alternative any longer in terms of getting better pricing. So looking at developments that can go into outlying areas, into counties outside of Franklin County, as we grow, we can't expect to live in the same bubble, right? We need to figure out how we can expand beyond what we've always used as our kind of core of Central Ohio or Columbus. So we talk about a Columbus metropolitan area. And as developers begin to contemplate that, we may have greater opportunity for affordable housing, greater density, hopefully, fingers crossed, as we move out and expand into other areas.
Thank you, Michael and Scott, both for your input. Yes, these are just going to be very interesting times moving forward. And I just, believe the more an individual can plan with the times and kind of move accordingly, the better off that they will be later on, or placing themselves in position for when it does come time to purchase a home. As we discussed before, it's a seller's market right now. So it is everyone keeps asking, what do you predict? What do you predict? And really we're all, we don't know, what's going to happen. And I know that's not the answer that everyone wants to hear, but unfortunately it's where we're at right now. Let's see if we have any more questions. Hopefully they will be coming in.
While you're reading the chat, I'll weigh in on that too, if I can, just because I think
Absolutely.
It feels a little gloomy to say we don't know, right?
No, it does.
But I don't think that we don't know because it's a lottery, that it's a complete random event, that anything could happen. What we don't know is how involved people are going to be. And I think if we stand up and say, here's what we want, as a community, here's what we need our housing scenario to look like. Here's what our landscape should look like. It could be really different. And to what you mentioned earlier, Michael, with regards to density, we knew that consumer preferences have been changed since the millennials started, at the very least, moving into Gen X, that they want more walkable, more dense neighborhoods where they can get a drink on the patio with their friends and then walk next door and pick up some groceries and then drop their dog off at the groomer without ever having to get in the car. That kind of neighborhood right now is primarily illegal. You cannot build a German village anymore. You cannot build a Clintonville because our zoning laws really aren't set up to let that happen. And I'll note that our zoning laws were written in the 1950s. So think about what our policies were in the 50s, and that's still what's guiding our housing decisions today. But that in particular, our zoning laws are going to be reopened this year. We're going to write them again from scratch. So if we all weigh in and say, we want something different, we want to be able to build affordably, we want to be able to build in those inner city cores, I think we could have a really rosy outlook. I think the potential is absolutely there.
And when you say, Carlie, we can all weigh in, how exactly do we do that? What tables do we sit at as agencies, as advocates, as, you know, individuals like Michael and Scott wanting to get more involved and be a part of this. How exactly do we do that?
Yeah, you sit at all the tables, right? For zoning. So for zoning right now, the city of Columbus has a survey out in the community. And you can, I mean, it's a survey monkey. You go online, we can find the link and absolutely share that. And you could weigh in. Real low hanging fruit. The Ohio Housing Finance Agency is the statewide entity that determines how low-income housing tax credits are going to be spent. And that's really the only way that we're building low-income housing right now is through that program. That's a public process. You can just show up at their door and tell them what you think, and they've got to listen. There are so many opportunities to plug in. Selfishly, I will say, come sit down with us, talk one-on-one, and we will get you in touch with all of those folks. But if you want to do the legwork and the research yourself, there's ample opportunities to engage.
Well, we'll definitely be sitting down real soon. I believe May 3rd, if I'm not mistaken.
Let's do it.
So Carlie, I appreciate you saying that, because I kind of described what could be done to help solve a problem. And the only thing that we really don't know, Dana, is we don't know which direction the economy is going to go. That's an uncertainty. And we don't know necessarily if developers are going to buy in, but we know what the answers are. We know what the solutions are. It's just a matter of, do people buy into that? We don't know if the millennial buyer pool will continue to grow as it has so strong, which is awesome. We love to see that. But we don't know that will continue. So all of those are the things that we don't know. But we do know about housing, we do know about the solutions, and we know how to work towards the solution. So thank you for bringing up the zoning code, Carlie. That'll be really interesting. I know that I sit on the BZA for the city of Columbus, so I expect that a lot of what will be rewritten will eliminate the job that I have to kind of vary the code, which will be refreshing, because we're expected to apply today a code that exists for the city of Columbus that, as we have expanded, to your point, for over 50 years, obviously at this point, like 70 years, I guess, close to that, somewhere in there. I'm sorry, you're right, 50 years. As we've expanded, so has the footprint of Columbus. So we reach areas in suburban Dublin, so to speak, where land has been annexed into the city of Columbus. So the decisions that we make there should not be the same decisions that we make in German Village or on the Near East Side or in the Far East Side near Blacklick. Those just don't go together. So it'll be interesting for me to see how all of that's put together. It's long overdue, but I would encourage, to the extent that you're willing to participate in that process, please do so. I remain hopeful that affordable housing will become a component of it, but I'm not certain that it will unless somebody speaks up and out about it. So I know Carlie will be doing that for sure.
Thank you so much. Marvetta, we haven't heard from you, haven't had any questions come in just yet, but I would like to give you the opportunity, as in being a restored citizen, business owner, and now homeowner. Do you have any questions for the panel?
I think that,
or anything you want to share or thoughts?
I think I would like to share, I've listened to the panel and gained a lot of insight. I think that everything you're saying is easy to receive and was a part of my process. I think that what I want to be clear about is it is the emotional approach that, or the emotional motivation that you have to have and maintain to get through this process. Because once you determine that you are eligible, even if it doesn't pan out, I had 3 lenders, 3 pre-approvals, and it didn't pan out until the 5th month. However, I was so emotionally, I felt so inadequate at that point. I lost confidence at that point. But even prior to that, just understanding that someone would have to monitor my spending. I mean, that comes from that trust, that those violations from, other experiences, and just being able to take a risk, a planned risk, an intentional risk, but still having to manage the emotional side of that. So I just wanted to share that to the panel, because that is something that I would like for you all to consider as a person who's restored, who's re-entering, who has positioned, who has worked hard, and who has prepared themselves to, you know, just get through this process of home ownership. It was very emotionally trying for me. I just happen to be just strong. I'm built for anything. I'm used to surviving and fighting and getting what I need to get, but most people aren't.
Right.
But that assistance and support and encouragement. And my third lender explained every detail of the process. The first two didn't. They just collected my documents and said, I'll call you later. I mean, that is a vulnerable feeling. I mean, you just don't know. So I did end up very fortunate to end up, and when I look back in reflection, and I'm going to tell you that I work with the reentry population and share this experience with them. What I'm grateful for is that now I know better. So now that I know better, I can have the courage and the bravery to communicate how this has impacted me emotionally, because that's really, you already feel inadequate. You already feel like you're not going to be qualified. Even though you make six figures, you feel like they're going to find some reason to disqualify you in the beginning. So I just wanted to share that. I'm sorry, I get real passionate.
No, thank you. We appreciate your passion. As I told you before, that's what drives you. And individuals, you know, I always say they need to get them a Marvetta, or they need to be like Marvetta. You know how they always say, be like so-and-so, or don't be like so-and-so. Well, be like Marvetta, you know, build that strength. If I could give a word of advice, it's needed. It's not something, I mean, you definitely have to have that. And it's okay. At different times in my life, I've been more weak than others. However, to know how to gain that strength back is really, really important. Tap into the resources that are available. Everyone here today on this panel has said that they are dedicated to be a leg of support to individuals from this population and coming home, or individuals that are already in, you know, living in the community. Take advantage of those resources. Marvetta spoke often about how she planned, how she saved, and how she became disciplined enough to do so. You know, all of that are things that are required in general, let alone in purchasing a home. Those things are required to move forward when you are coming home from incarceration. Those things are required in any career pathway that one would choose. So having the basic requirements is very important. And a lot of individuals that we serve have those basic requirements. They are just somehow buried deep, or they lost that value within themselves. So just know that the leg of support is here more than ever. As Marvetta mentioned too, things that are available as support and resources now were not available when she returned home years ago. Not telling her age, because you know she's 21, right? So, you know, you just, again, take advantage of the resources that are here in the community. Don't let fear hold you back. We are here to help. I cannot stress that. A lot of times this population, again, has trust issues, or they feel like, you know, they say they're going to help, but they're not really going to help because the other 10 individuals or agencies did not. When I cannot express to you how much support is here for you if you have a criminal background, formerly incarcerated, or just justice involved. It's like never before. I mean, look, we have National Reentry Week that we will be honoring every year moving forward. This was established in 2016 by the Obama administration. And we are going to, I'm giving my word that every year I will commit to really, really diving into this week giving individuals the resources that they need to be successful. And then all of us are going to have continued conversation of how we can be a part of this effort, this initiative to try and reduce housing barriers in the housing market that we face. I have not had any more questions come in. We're down to about the last 15 minutes. I did have to kind of cut out the final words and remarks short. So if anyone wants to offer any additional final words before we say talk to you later, not goodbye.
Hey, Dana, it's Scott. I wanted to throw out, you mentioned resources, and I think it's something good to note that we have a really great agency here in Central Ohio called CMHA, Metropolitan Housing Association. And it might be a great step for folks once they are entering back into society to be able to be a part of that Columbus Metropolitan Housing program. You know, it gives them a year or so to get back on their feet, build that money up as Marvetta has done, which was great. And a lot of people don't realize you can buy a home while you're in the Metropolitan Housing Program, and they will help you with your payment for the next 15 years. So it's a terrific program, and it's something that you might want to look into because they have the opportunity. The downfall is there's sometimes a wait list to get into their program, but perhaps that's something that we as a group could go back to CMHA and say, hey, please, could you consider opening up some slots here for people that are moving back into society?
Mm-hmm. Well, and good news is because of some at the federal level, CMHA is getting a lot of new housing vouchers this year. So they are absolutely going to be opening that wait list up. If your name isn't on there, get on now.
Absolutely. And then CMHA is doing a lot of wonderful things to support individuals that have been formerly incarcerated or justice involved. So we would definitely have more continued conversations. You can also visit our website, which is www.archreentry.com. We will have updates, resources available for the community. And if any of you would like to share your information with me as a resource, we can put that on our website as well. Thank you, Scott, so much.
I can throw my final 2 cents in because I think it really bounces off of what Scott said, which is when we sit in housing rooms with housing experts, we tend to focus on housing, but the biggest reason people become evicted or fall behind on their rent is they don't have the income to support their housing. So it's 2 sides of a coin. And it's really difficult to say, well, just get a better job, and then you can pay for your housing because there's no bootstraps to pull yourself out by unless we give you kind of the platform to do that. At the Alliance, we're working on a new program now. It's a little bit on the QT, right? So nobody tell anybody, right? But what it is this concept is that if we give you a safe, affordable place to live for the next 15 months or so, and you use that time to go through a workforce certification program in a high pay, downturn resilient, benefit loaded job, will you need public benefits anymore? Will you need to go to CMHA? Or is that all you need? You just need those few months to get yourself back on your feet. I think that's going to be a fantastic program. I have my fingers crossed that it's going to be funded and it's going to be successful, although that's still a little to be determined. But assuming it is, then my question is going to be, what's next? How do we do that again? How do we replicate? How do we scale? How do we expand the population that's to serve? And in particular, looking at people who've been justice involved. How can we modify this in a way that is really catered for that population and is really supportive, not just kind of from the navigator standpoint, but from a peer support space, so that you've got someone who's an ally and who's walking through it with you, that you can talk about that emotional side as well as the practical side. I think it'll be exciting. Stay tuned.
Absolutely. Thank you, Carlie. Anyone else? All right. Well, thank you, everyone. Thank you so much. We've got nothing but praises to all the panelists that are here with us today. Thank you for everyone that watched and had questions for our panelists. Please continue to support Central Ohio Reentry Week. We have a full week full of events, please visit www.centralohioreentryweek.com for full details. Again, thank you so much, everyone. Have a great day.
Thank you.